Bitcoin has just shattered the $90,000 mark, and now it's already trading above $93,000, reigniting massive bullish energy in the crypto market. The big question now, are we on a fast track to $100,000 and beyond? Let's start with the facts. Bitcoin is up more than 5% on the day, showing strong, renewed momentum. This rally is backed by real-world fundamentals, not hype. One of the major catalysts is that the International Monetary Fund just forecast higher US inflation and weaker global economic growth. Sounds bearish, right? Not for Bitcoin. That narrative has turned BTC into a go-to-hedge. As Bloomberg put it,
just in the last 2 days, it seems to be turning in perhaps to a haven asset for investors who are looking for a little bit of cover from this global trade war.
Now to the institutional front, this is where the fire is being fueled. On Monday alone, spot Bitcoin ETFs saw $381 million in net inflows, one of the strongest days we've seen in weeks. This isn't retail speculation. It's real money flowing through regulated investment vehicles, which adds serious credibility to Bitcoin as an institutional-grade asset. In fact, over 1,000 ETFs are now trading, and BlackRock's IBIT ranks 4th by trading volume. But it doesn't stop there. Investment firm Strategy recently acquired $555 million worth of Bitcoin, nearly doubling their previous buy. That's the kind of high-conviction move that shows how seriously large players view Bitcoin's long-term potential as a digitally scarce macro hedge. Tom Lee from Fundstrat is also sounding the alarm in a good way. He told CNBC,
Bitcoin earlier this year may have been struggling with some of the deleveraging that was happening for institutional investors.
Just selling what they could.
Yeah, selling what they could, and I think that suppressed Bitcoin, especially over weekends. But now that deleveraging is done, I think that Bitcoin is going to catch up to gold, and Bitcoin's old high was over 110,000. So I think there is a lot of room to catch up as a sort of non-dollar asset.
On-chain data backs this up. Bitcoin's realized cap, which measures the aggregate value of coins based on the last time they were moved, has just reached an all-time high. According to analyst Carmelo Alaman, this surge is a sign of increasing capital inflows and growing investor conviction. Historically, when realized cap breaks records, it precedes major price moves. At the same time, funding rates across exchanges are negative, meaning short sellers are paying longs to stay open. This creates the perfect conditions for a short squeeze, especially with around $5 billion in shorts clustered around the $95,000 mark. If price keeps pushing up, we could see a cascade of liquidations that drives Bitcoin even higher. And now, the big picture. According to CoinCodex's latest forecast model, Bitcoin's current trajectory aligns with a powerful long-term trend. Their data shows a strong rally continuing over the next few months, with Bitcoin projected to peak at around $180,000 by August 2025. With liquidity expanding again, history may be repeating itself, and that means major upside. We're also in the middle of what many are calling a death cross rally, where Bitcoin bounces hard after a death cross formation. We saw this in 2023 and again in early 2024, where prices dropped into the cross, then rallied strongly right after. Add in a 90-day pause on reciprocal tariffs, a decline in the VIX volatility index, and expectations for renewed global stimulus, and you've got a macro setup that favors bulls. To sum it all up, Bitcoin's surge above $93,000 is being driven by a perfect storm of ETF inflows, institutional conviction, technical pressure, and macro forces. All signs point to this trend continuing in the short term with upside potential for months to come. The CoinCodex forecast of $180,000 by August 2025 could be more than just a dream. It may be a destination.